I get questions about mortgages and paying them off, when you should pay them off, getting them paid off by retirement, and every different combination in between. And it makes sense really, because your mortgage is often one of the biggest expenses and biggest investments that you will ever have in your retire life. And so if you are able to get your mortgage paid off or something, manage that expense well, then it's gonna make the rest of your life, and especially moving into retirement, so much easier. But does that mean that it is worth basically anything it takes to get your mortgage paid off? Well, I don't think so. There are actually many different circumstances when you should not be paying off your mortgage early, right? You should wait. But there are some great reasons too. So we're gonna go over all the reasons you really should be paying off your mortgage, and then some of the reasons why you probably should wait, maybe take it a little slower than you might want to. And if you are new here, it is great to have you. My name is Dallin, and in every video, every podcast, we go over things that you as federal employees are going to know to be prepared, or going to want to know to be prepared for retirement, whether it's about your benefits and investing or taxes or anything that affects you and your retirement. That's what we talk about here. So without further ado, we're going to jump in to the 3 big reasons why you will want to pay your mortgage off early. Now, number 1 is pretty obvious, and that is not having a mortgage is going to lower your monthly expenses. Now, if you're still working, that's amazing. Well, that cash flow that would have gone to your mortgage can go to something else. Whether it's, okay, let's put more away for retirement, right? Or, hey, now we can do that extra vacation, right? Or maybe, hey, let's put that towards the kids' college. Whatever it is, it can go somewhere else, which is great. It could go to things that are more important to you. Now, especially if you are retired, then what it does, it allows you to have less income in retirement and still maintain the same standard of living that you had while working, which can be a great thing to potentially retire early, right? Or just retire and not have to take as much out of your TSP, 401k, IRA, whatever savings you and your spouse have. Now, number 2, the second reason why you should consider paying your mortgage off early is to save on interest, right? And right now, interest rates are so low so that this is really a smaller factor than it normally is. But maybe years ago, you got your mortgage and your interest rate isn't that low. Well, it becomes more of a factor, right? But honestly, one concern I do hear about getting your mortgage paid off early and not having to pay interest, right, is not having the mortgage interest deduction on your taxes. Because many of you know that if you have enough mortgage interest plus other deductions, you can deduct that on your taxes. But with the standard deduction for your taxes being so high right now, this is actually less relevant for more and more people, because it takes quite a bit of deductible expenses to even get above the standard deduction to have it make sense to itemize and to get any benefit from the interest at all. Now, even with that being said, the closer you get to the end of your mortgage, the actual less percentage of the payment that you pay every month is going to be interest. So it becomes less and less of a big deal. So long story short is, if you pay your mortgage off early, then you don't have to pay the interest you would have paid if you would have kept paying it for a longer amount of time. Now, reason number 3 why you should definitely consider getting your mortgage paid off early, especially by retirement, is it will make you happier. Yeah, I'm serious, right? There's been multiple studies on the closer someone is to having their mortgage paid off, the happiness level and contentment level actually does increase, right? And especially as you retire, to not have that debt hanging over you can really be an incredible and liberating thing. Now, obviously, you want to make sure all your other debt is paid off as well, but not having it just emotionally can be a big deal. Even if, let's say, even if you can make more money in the market or something else, putting your money elsewhere, getting the emotional return from not having that debt can be a really powerful thing to give you the more freedom and flexibility in retirement and emotionally more energy to focus on the things that you want to focus on later. Now, those were the reasons that you potentially should pay your mortgage off early. Now, there are some major reasons why you probably shouldn't. Now, let's talk about number one. Number one is if your cash reserves are low, okay? So this is what I call being house rich and cash poor, which you want to avoid being in this situation. So long story short, if all your money, all your cash is tied up into your home, where let's say an emergency comes up, something comes up where you need cash, well, if you don't have anything on hand, it can be very stressful, forcing you to go to credit cards or something else to pay for these expenses because you don't have the cash on hand. So you want to strike a nice balance between having enough cash on hand, but also, paying your mortgage off early if possible, so that you don't do one more than you should above the other, right? You don't want to just hoard cash, so much cash that it's not doing any good, right? You don't want that either. You want to have a balance where you have an emergency fund, you have the cash you need if something comes up, but you're also putting away to your mortgage as well. Now, number two, and that is if you have high interest debt, then that is what you should be focusing on before you look at your mortgage. Because like I said, right now with interest rates so low, generally speaking, someone's mortgage is the lowest interest debt that they're going to have, right? That may not be the case for you. You want to check it out for you, but the vast majority of the time, that is the case. So if you have credit cards, personal loans, anything with a decent high interest, you definitely want to get those, you want to attack those. Honestly, in my opinion, if you have high interest debt, that is, in personal finance terms, an emergency. You want to attack that with everything you have to get those paid off, because high interest really racks up very, very quickly. Come up with a plan to attack those first. Once those are taken care of, then start thinking about getting your mortgage paid off after that. Now, number three, the third reason why you may want to consider putting money elsewhere before paying more money into your mortgage is if you aren't quite prepared for retirement. If you aren't on track to have money in your TSP, IRA, your retirement savings, right? If you aren't on track for the amount that you want to spend in retirement, those sort of things, then maybe you want to prioritize being prepared for retirement. Because what I certainly have seen many people that have retired comfortably and still have a mortgage in retirement. I've seen that, right? That's very common. Now, it is much less common for someone to retire with limited savings, limited retirement money, and still be comfortable and confident in their retirement, even if they don't have a mortgage, right? And there's a balancing act here, but you want to make sure that your TSP, your retirement savings are healthy enough so that you can retire when you want. And obviously, if not having a mortgage by retirement is important to you, make a plan for that too. But again, you want to strike a balance here. You don't want to have you don't want to be, again, house rich, but be super poor when it comes to retirement savings. You want to make sure both are doing well. Now, number four, the fourth reason why you may not want to put more money into your mortgage right now is for diversification purposes. And this is kind of related to my last point, where if you have a large portion of your net worth, of all the money that you have, all the assets that you own, if a huge portion of that is tied up in your home, then one big principle in investing that is so crucial is diversification, meaning you want to spread your money out into different things so that if one thing struggles, well, the rest of your money is going to be okay, right? It's spread out amongst a lot of things. Now, if a huge chunk of your assets, of your net worth, is in your home, well, what if home prices take a steep dive, right? Which they certainly could. What would that do to your net worth? Is that going to be okay? Are you planning to move soon, right? There's lots of things to think about where you want to make sure you're diversified over time in a way that makes sense. Now, I'm not saying that you want to not pay off your mortgage just for this reason, right? There's lots of things to consider, but you want to make sure, again, that a huge percentage of your net worth is not just your home. You want to make sure you're diversified amongst, let's say, your retirement accounts, maybe money and investments in a brokerage account, your emergency fund. You have money in different spots so that if home prices take a dip, that your whole net worth isn't shattered because it was all tied up in your home. Now, reason number 5 about maybe not paying off your mortgage as early as you might have thought you should, and that is if the only money you really have is retirement accounts, right? And this is a common situation where someone's about to retire or retiring, and let's say they've got $500,000 in their TSP, in an IRA, in retirement accounts, okay? Let's say they have $80,000 left on their mortgage. It could be more, it could be less, whatever. Let's say 80 grand, okay? It can be super tempting for this person to say, hey, look, I've got $500,000 in my TSP. Why don't I just take 80 grand of that and pay off my mortgage so I can go into retirement without a mortgage? That would be wonderful. Now, if this is you, I want you to make sure this makes sense before you do this, because often this is not the best strategy. Often you want to, at the very least, spread out the tax years that you do this. Because if you take 80 grand out of your TSP, your traditional TSP, all in 1 year, right? Then you're gonna have a pretty large tax bite where you may get popped up into a way higher tax bracket, which can mess with Medicare, can mess with a ton of things. And it's bottom line is this: you're gonna be paying a lot more than 80 grand to get your mortgage paid off by the time you pay the taxes, potentially higher Medicare premium. There's a lot of things that it could affect by taking a huge chunk out of your TSP to get this paid off. Now, again, one strategy to try to avoid some of these symptoms is to spread that out over some years, or maybe just pay extra onto your mortgage payment, right? Because again, it's possible to retire confident and comfortable even with a mortgage, but with some of these things, taking a huge chunk out of your TSP first can really cripple your TSP, depending on how it grows and things like that. So these are things to consider. Again, not one of these points is going to make the decision for everyone. Everyone's going to have different situation. You want to consider as many factors that are relevant for you. But that's why in this video I wanted to cover as many different things that I thought were relevant for most of you. And if you found this video helpful, then please consider subscribing, leaving a comment, leaving us a rating on the podcast. Whatever you can do to support the community is great, and it helps us out a lot. So I hope that was helpful. Have an incredible rest of your day. We'll see you next time.